trading can seem complicated, especially when you are beginning, because there are so many things that you need to know. For example, which time frame do you use for your top-down analysis? Which levels do you use to look for good entries? And where exactly do you decide to take your profits or to cut your losses short? All these questions can seem intimidating, but once you understand the simple concept that I will explain in this video, then trading will be the easiest thing that you've ever done. So if you are new to the channel, subscribe. Let's jump into the video. All right, so step one is understanding the time frame. So you can use one time frame and still catch very good trades. So we will be using the 1 minute time frame for this trading strategy. It's a scalping strategy and we only trade 1.5 hours per day. Now, let's start. Step one is time. So we come to the screen at exactly 9:30 and we trade up to 11 a.m. This is New York time. Step two, time frame. So we use the 1 minute time frame to analyze the markets. Step three is levels. So identifying the levels where you can get in and get out is the most crucial thing. So let's start. Now, we will use the example of oil because last week oil was very generous. So first things first, when we come to the screen, we come to the screen at 9:30. So where is 9:30? This is where 9:30 is. Now, when you come to the screen, you have to answer some of these questions. Number one, what is the market doing? Now, here's the thing. Markets will always do three things. Number one, we will have an uptrend. Like that. Number two, we will have a downtrend. And then number three, we will have a consolidation. So, let me ask you, just take a few seconds and look at this chart here, this pattern. What do you think is happening? Are we in an uptrend? Are we in a downtrend? Or are we consolidating? So we can see we have this nice pump to the high, and then price just started consolidating. Now, a consolidation is just an area where price is not moving either to the upside or to the downside. It is bound on a range. And this is very important because you don't want to be caught in these explosive moves, because there is a high probability if price is moving explosively towards one direction, then there can be a quick reversal. So you want first to identify a consolidation. So when we come to the screen at 9:30, this is what we see. We have a consolidation here. Now, let's talk about pins and candle body candle closure. How do you draw? And this is just my personal preference. There are many different ways of drawing levels, but this one is the clearest for me. So what we do is we want to identify at least 2 highs and 2 lows. So what does that look like? Like that. So it's like you have a double top and a double bottom. So if you have that, you have a level. So let's see if we have a double top and a double bottom here. So if you look at how price moved here, price goes down, goes up, goes down, then goes up, then goes down, then goes up. You can see price is just creating double tops and double bottoms. Now this is not a 1, 2, 3, 4, 5 tops, 5 bottoms. That's a pretty good solid level. Now, if a pin breaks out of your level, but then it closes back inside of the range. For example, we have this pin here. Then what you do is you extend your high to this level, or your low, you extend it to this level. Now, another thing that's very important is visualizing what you want the market to do before it does it. That way, when you come to the screen, you are not chasing the moves. You are laid back and you are waiting for the market to give you your setup. Which means if you don't get your setup, you don't trade. And that is very important because the goal is to preserve your capital and only take high quality setups. So when you have your consolidation like that, theory is very simple. If we break out to the upside and close above it, that is your buy signal. And if we close below and sell to the downside like that, that is your signal to sell. So let's see what happens. So at 9:30, market opens and boom, we have that breakout candle. That is your entry. Then stop loss will be placed above breakout candle and then you are targeting a 1:2. Now, I want to take you through my thought process as I was taking this trade and where I got out with my profits. So we can see price continues breaking out. Now, here's the thing. If price is breaking out, that is a strength signal. So you can continue holding that trade. So what happens? So price continues breaking out. Then we have this mini failed breakout to the downside. Now, once I start seeing we've been explosively breaking out and then price is starting to give us a little retracement. Since I'm scalping, I want to get out as quick as possible. So at this point, I'm watching if price will close above this candle's high and then I exit with a small profit. What happens? So price is still consolidating here. We've not closed above it. And at this point, we have moved our stops to break even. So this one was a risk-free trade. Then what happened? Price broke out again. At this point, we moved our stops above these highs. Then price started to reverse again. Then I think I got out here. I got out with a nice 1%. However, price did continue going down, hitting our TP before reversing. Now, let's look at some other examples. Some of you requested more examples, so let's look at them. So, on oil again, when you come to the screen at 9:30, so here is 9:30 here. And you can change, by the way, your trading view settings to match the New York time. So you can go to time here, UTC -5. However, let's get back to business. So when we come to the screen at 9:30, what do we see? Is price in an uptrend, downtrend, or consolidating? So firstly, we have this level up here. And then to the downside, this is where we have one touch, two touches. So when price breaks out to the upside, we buy, to the downside, we sell. What happens? 9:30 pins the high. This is our new high where we want price to break out. Then nothing really was happening. This is where we want price to break out. And then notice this is another new level for me. So that was, I was eyeing that level. And what happens? So price is just pinning it, nothing really. And then at 9:45, we have our official breakout. So that was our signal to get in. Stop loss was above that candle. We are targeting a 1:2. Then what happened? So price actually stops us out. So you can see that this is not like a 100% win rate. We do get stopped out sometime. So once you get stopped out, the way I do it is I'm done trading for the day. I go and do other things. Let's look at another example. Same thing, you come to the screen at 9:30. And at 9:30, we are asking ourselves, what do we see? So we have this level here. To the downside, we have this level to the upside. So anything above we buy, anything below we sell. What happens? So at 9:30, price is just consolidating and then boom, breaks out. That is our entry stop loss above breakout candle. We are targeting a 1:2. What happens? So you can see, oh my goodness, this was a very good day because price just continued breaking out like that. I think we got out down here, somewhere around that, down, yeah, somewhere around there. That was a very nice, beautiful trade setup. And you can see it's very simple. Just come to the screen at 9:30, identify your level, wait for a breakout, get in, and then manage your trade as price is either moving towards your direction or against your direction. Same thing on Monday. We come to the screen at 9:30. What do we see? We don't have a level yet. So we wait for a level to form. And a level, this was a potential area where we had a level. So we have this high and price comes to that high again before being rejected. So that confirms the level. If we break out above, we take our buys. And we took our buys here. Stop loss was below breakout candle. And then we are targeting a 1:2. And then actually on this day, we exited here. And that is because once we get into a trade and then the next candle is a reversal candle, why would you stay in that trade? It's telling you this is not what we want to see. And you can't hope and sit there, oh, I hope this trade goes in my direction. That is how you lose your money. So if it's not behaving according to what you want to see, and what exactly do we want to see? Do you see how price moved here? So if you got in, say for example, here after this breakout, you want the next candle after the breakout to move towards the direction of the breakout. That is a sign of strength. So if it does not do that, that is a sign of weakness. Exit that position and then just call it a day. Because on most occasions, when price does not have enough volume or it's not moving quite very well, it will chop people out and then move on later when you don't have the money to invest. So remember, capital preservation is at the core of this strategy. And these are some of the trades that we took. You can see here. This was just last week. It was an awesome. If you want to learn this strategy and more, you can join my live trading for free every single day. Link will be in the description. And if you want to use my recommended broker, then also I will leave a link in the description. Check it out and I will see you in the live stream and in the next video. Peace out.